this is a beginner's class. Welcome to GFI Beginners Lessons. Everybody can hear me fine. Everybody see what's going on in the charts. I'm not going to waste any time. We'll cut into the market just now. I think everybody knows how I do these webinars, and if you are new at this, please feel free to ask questions. You can just type in your question and I will stop. The questions come up as we go along, and then I'll just answer your question and I will move then to the following. Just a few admin rules. Guys, go to our Facebook page, please, SA Trader Lounge. Go down to George van der Riet post and you will see the competition that we are running. There's a lot of prizes to be won. There's our leaderboard. The guys with the most percentage gross will walk away with a few prizes, and I see today that they also gave $1,000 management account from ACM Gold that she can manage as a live account that she got $1,000. That's her account now. So please go and register. It's very easy. All the steps are there. You just go in, you click on the link, you open a demo account with ACM Gold. You go and register on FX Blue, and you will just join SA Traders Cup, and we will see your results, and the winners will have a few prizes. There's lucky draws. So even if you don't come under the top 10, top 15, there's still prizes to be won. So please go and open up a demo with ACM Gold. Register on FX Blue, SA Trader Cup, and you will then be part of our competition. There's the link, group rules. You just go in the ACM Gold open demo account, you register yourself on the FX Blue account. They will send you an email which you then reply, and there is the live link so that you can see what the results are. Everybody with me? Just hold on, I think George is looking for me. Antwoord maar. I'm just going to pause for a while. Just hold on, thank you. George. Ek is besig op die webinar, het al begin. Ja, nee, die link is gepost, ek sal hom gou weer post. Okay, George. Okay, bye. Alright, there's a few guys that wants to join the webinar. I'm just going to paste the link again. Sorry, everybody. Right, let me go just quickly and help these people. Sorry everybody, we must accommodate everybody. I don't want to miss anyone. There's the link again. Alright, there's the link. I'll wait for a few minutes. Then we will go on. Okay, group rules, we went. Alright, so everybody is going and register please with the competition. Lots of prizes to be won. ACM Gold is a big sponsor. A very nice trading platform. I also got my live account with ACM Gold, and I also got a demo. I am on the competition as well, and I'm on the first page already, so I'm not going to tell you where I'm at the moment in the competition, but I'm on the first page already. So please guys, this is proof that the webinars do work. You are not in the company of guys that do not trade. We all trade, we're all live traders. So if you want to learn to trade, this is the place to be. The webinars are for free, and you can also book your first class for free on our website or on our SA Trader Lounge page on Facebook. Please go and look at the live market. Let us teach you how to trade the correct manner, make some money, and if you are lucky, maybe you can do this full time, and then you can have a trading career which is very profitable. Alright, so let us go into the market. Let's start with a few indicators and how I use the indicators. There's something I want to show you, the guys that know something about the trading. On the euro, I just want to show you the fractal market of the market, the fractal nature. I want you guys to look at the following. Look at that down run here, and look at that down run here. From the stop here, from the resistance, look at that first leg. We've got a pullback, we've got a down and a pullback. Look at the same market here. We've got down, pullback, down, pullback. Can you see that this area is exactly the same? That area there is the same area as this one. Can you see that these two legs are similar? Look here at the bottom. You will see there's one leg here. There's a little bit of resistance there. I believe we're a little bit of resistance there. And the market from there fell another 20%. I believe the euro is going to fall another 20%. And then we will turn. That is the fractal nature of the market. That is what we do as traders. We look for patterns in the market and we trade according to patterns. There's a lot of patterns that we will go through today, like double bottoms, double tops, triple bottoms and tops. And head and shoulder patterns are also quite often in the market. Do you understand the fractal nature of the market? How legs can look exactly the same. And if I put some stuff in here, you will see that's my first little run with the retracement there. There's my second one. I'm just going to mark them with ones. That is exactly the same. This was a small resistance, which I believe is this, and we came down, we made a bottom, and I believe the euro is saying that we will make a bottom here and then we will turn around. Can you see that market is exactly as this market? That's the fractal nature of the market. That's what we do as traders. We want to look at patterns in the market. Right, everybody happy? I'm going on now. I think everybody logged in now for the guys that is late. No worries, I don't think that you saw the link. Sorry guys, I just posted again for the guys that's late. Welcome. We are going to some basic trading principles, which I believe is essential for successful trading. Alright, so let's start. Rule number one, you always trade in the direction of the trend. If the market is coming down, we're looking at the euro here. There's no reason why I want to buy this market. We're working from this top here, from the resistance there. Remember, resistance is at the top of our chart, working from our current price. Resistance will be at the top and support will be at the bottom. Alright, so how many resistance and support do you see on this chart? I will mark my resistance in red lines at the top, and I will mark my support at the bottoms. So there I know that is resistance. Resistance are places or roofs at the top of the current market where price may bounce off, or where the bears going down to control of the market. Guys, if you look at this chart of the euro on the monthly chart, there is no support on this chart. If I zoom out and zoom in, there's the first support there. There's my first support here at 107.47. That is my first support, and this will be my second support. Alright, so if we zoom in again at this current chart, there is no support. The support is far lower than that. Alright, so I can suggest that the market will go down and test the support. That's another 600 pips from here. Alright, so support at the bottoms, resistance at the top. And how do I calculate that? It's very easy. I take the current market, I go up and left. If I get a higher high, that is resistance. Up and left is resistance again. And obviously when I go down and left and I find lower lows, I will get support. So if I zoom into the daily, I can clearly see that there is a resistance there. So let's mark it with a bit of a trend line, otherwise the whole chart is going to be full of lines. So that's my first resistance. That is my current market price. This little grey line here, that's my market price. That's my first resistance. There's a small resistance there. Do you see how I work up and left? If I find a higher high, I mark that as resistance. There's a small resistance. And so I can work back, and I will find all my resistance working back. And if I go down from the current price and work to the left, I will find my support. You will see as I go along from the daily into the 4 hour, there will be more and more resistance lines, and there will be support. On the 4 hour here, there is support now for the first time. There wasn't support on the monthly or weekly or daily. There's my support working on the 4 hour chart on the euro. Why is that support? Because from the current market I'm working down and left. If there's a low and a lower low, that is my support. So what do you do here in this market? Or what is the game of Forex, or what is the game of trading? Bulls are the guys that wants to buy. They want to take out the resistance. They want to push price higher. They want the price to go up. So that resistance must give up. That resistance must give up. That is the aim of all the buyers, all the bulls in the market. They want to take out resistance, and they want the price to increase. Obviously, if you buy something, you want the price to appreciate, and that is what will happen if this market goes up. What is the aim of the bears or the sellers in this market? From the current price, they are gunning or going for the support areas. They want to take out support. They are selling. If you sell something, you want the price to depreciate so that you can buy it at a cheaper price later. So that is the aim of the bulls or the buyers. They want to take out our resistance, and our bears or sellers, they want to take out support. If that support gives up, I can promise you guys that the euro is going to the next support, which is only at 7.47, so that's another 600 pips. At this moment, this market is sideways. The support and resistance are close to each other. So this is a sideways movement. We must see who is winning at this battle here. Alright? Who is winning? Who are we going to join? Are we going to buy it with the bulls because they win? They're going to push the price up? Or will we decide we are selling because the bears are pushing the price down? We want to sell with them. Is it clear to everybody, support and resistance? Did I explain it correctly? Is it clear to everybody? Does everybody understand it? Support and resistance. Right. It's always good to have a pen and paper with you guys, so that you can make notes. After a while, you can just go and look at the notes if something is not clear. Alright, so we know what we're aiming for in trading. We want to buy or sell. Obviously there's prices and patterns in the market that we will buy and sell, and obviously we've got nice indicators that we can use to assist us with that. So let's clear this chart again. and I'm going to the Canadian dollar. I'm going to use this chart. I'm just going to take off that orders that's lying there, and I'm going to clear this chart as well. Alright, so guys, the first thing that I want you to understand is that if we are in a market that is in a fall or a down run, like this market here, let's only work with that area there. I double click, I press Control, and I drew a parallel line. Alright, so that is my downward channel. The market here is bearish. Let's forget what is happening after this. Forget the yellow box. That market is not active to us now. I want to show you guys in this down run, in a bear market, how we will trade this. Obviously we'll know we are selling in this market. You can't trade against the trend. We know that the buyers and the sellers are trying to push and break the support and resistance. So this little low here, we were at a high there. Let's mark it again with a trend line there. That was my resistance, and this low here was my support. So the market in this case, and I'm going to put it yellow again, so that you can understand where I'm at and what I want to show you guys. This is just normal trading rules. Alright, so we were in a sideways movement there. This can happen on a monthly, this can happen in a weekly. Let's go down to the weekly. There's our weekly chart. So the market there was between a support and a resistance. You can see here at the left was a support. There's the support held up. The market went up, and here at this point the market broke the support. Right down. Past support becomes future resistance, and past resistance becomes future support. Alright, so what is that meaning to us? The guys are selling, the bears are in control, or the sellers, and they broke the support, and that support or that floor became our roof. Look how the market came back here and it didn't break the roof again. Alright, the market broke down, came back to that specific price, and from there the market just fell. Alright, so that is very important. That's very common in the FX market, that as soon as support and resistance breaks, they will then come and test the backside. We call it the testing the backside. I can show you guys a lot of examples, but this is a very nice example of how it happens. Alright, so after it broke down, I've got a channel, I've got the resistance line there. Let's do it like this. So I'm going to trade this market. Otherwise I'm going to sell that support. As soon as the support breaks, I will then can sell that market. This is a sideways channel, and the rules of a sideways channel, guys, is that you go for the exact same distance as the previous channel. So where will my limit be? If I sell that support line that became resistance, where will my limit be? Exactly the same distance as that previous channel. So down here will be my limit. So that's where I'm selling. The bears are in control, took out support. My limit will be the exact distance of that channel there. Do you guys understand that? I'm going to mark it as a A. So the distance A is the same distance as A. Do you see that? Everybody understands that? This is without any indicators. This is not price action. This is very basic stuff. This is just support and resistance. Selling in favor of the bears, buying in favor of the bulls. If the price goes up, I'm buying. If the price comes down, I'm selling. Alright, so we out of that trade. We took a nice profit, and now the market is trending or in a sideways channel. Guys, if the market is in a bear market, in a downward channel, we don't want to buy. We want to sell. And we want to sell trend line breaks. Look at that. look at all these trend lines that I draw in, which I can sell. As soon as that trend line breaks, I'm selling. This is a corrective move, and otherwise this is an upward channel in my downward bear market. As soon as that corrective channel breaks, I'm selling, and the same rule applies. If this channel breaks, I am selling in the direction of the trend. This is also a corrective move against the trend. I want to sell. Do you see in a bear market that it makes lower lows all the time? The resistance is coming down. Also the supports, we are making lower lows. We are testing previous supports, we're going down. And as soon as the market breaks out, we know that that corrective channel is gone. This was our last resistance. Look at the resistance. Those candles here took out that resistance, took out this resistance, and this resistance here at the top is still standing. So that's my first and second resistance if I look at this market. Current price go up, there's my resistance there, and above that, the only higher high there, there's my other resistance. So 30.44 is my first resistance on the Canadian dollar. That's a nice resistance area, and above that, there's another 1,000 pips to 140. That's my next resistance. So what I can expect here, I can expect the market to have some resistance here. In other words, it can bounce. There's a lot of sellers that will come in here, or the market can break through. And according to my indicators, which I will show you now, we can buy and sell. Alright, so that's very easy. Everybody understands? Everybody with me? Do you guys still hear me? Sometimes we just go on and on with this video webinars, and we don't know if the people are still with us. So I'm just checking if you guys still with me. Everybody's still fine. Any questions, guys? Now's the time for questions before we can go on. Alright, support and resistance, very easy. Right, let's clear this chart. Look at this downward channel. Again, that is a resistance line. That is my bear market channel. And I want to sell as soon as my upward trend line breaks. There is a nice sell. Alright, market came down, test the bottom, then I'm out. There's also an upward trend line. Market broke. I'm in a downward channel. I want to sell this market. I want to sell this market until the market tells me it's not going down anymore. And where will that happen? It will happen when the market is getting bullish. In other words, it's taking out my resistance. At this instance, in a downward movement, it's making lower lows and lower highs. This market is bullish if it makes higher highs and higher lows. Abigail is asking a question, how do I know when support will break? Abigail, we don't know when support will break, and we don't know if it will break. Same with the resistance. Here at this example here, it was in a bear market from 2006 to 2009. So that's a 3-year downward movement where the bulls couldn't break the resistance. Look at the resistance here, I will show you. For 3 years in a row. Lower highs all the time. So resistance held. There's the resistance. That resistance came down all the time. Here was the first instance where the bulls took control and they broke the previous resistance. I don't know when it's going to happen. I don't know if it's going to happen. But I know if it happens, if they break the resistance, I know the bulls are in control. If that resistance breaks, then I want to buy, because then I'm in a bullish market, or the buyers is in control. You will see with a bear market, my trend line is at the top. I want to show you guys how you draw trend lines as well. That was channel, forget a channel now. This is a trend line. In a bear market, always going over the resistance lines because that is my resistance. I want to know when the bulls are in control. When this resistance line or trend line breaks, I know the bulls are in control. And if the market is bullish, obviously my trend line will be over my support or across my supports at the bottom. Guys, that is the correct way to draw trend lines. Yes, Mr. Mogorosi, support is at the bottom and resistance is at the top, even if it's bullish. Bear market or bull market, resistance will always be the roofs, and support will always be the floor. Good. Mrs. Mogorosi, thank you very much. My apologies. Alright, so in this market I'm bullish. What I want to do in this market, I want to buy. I'm not looking to buy in this market. This is the euro against the Japanese yen, and this is my daily chart. So let's look at this market where we're at the moment, and look at this sideways movement here, support and resistance. You will see that is a low, that is a support here at the bottom. There's nice support. Look at that support there, there's support there, and obviously my resistance will be at the top. Right, so there's my support and resistance. We're in a sideways movement now, in the sideways market. This market is correcting, or sideways. It is waiting for somebody to take control. It's either way going to come down, the bears are in control, or it's going up. Abigail, that's why we do not know what is going to happen, because neither the resistance or the support gave way. But there's a little thing that we call a triangle. Some guys that know is that the market is contracting in price. So that is also a support, and that is also a resistance line. This is called a triangle. There's a specific way that we know that the triangle is breaking. And another thing of the triangle, a triangle is called a trend continuation pattern. So we're in the bullish market, the buy is in control. You can see we are making higher lows at the bottom. Our trend line is at the bottom. We want to buy in the market because the price is going up. We're trading with the trend. And now we see that the market is making a triangle. This whole area shows me that 9 out of 10 times my resistance will most likely break, and this market is going up. And that is basic trading rules, guys. Triangle, it's a bullish continuation pattern in this instance. I know the market price is going up. I would rather buy than sell in this market. Alright, everybody with me? So that's a triangle. Let me show you another pattern in the market called the head and shoulders. I'm not going through it again. I think I did a video again with it a few times. But there's one specific thing that I want to show you. Support and resistance as well. This is a head and shoulder pattern for the guys that do know. For you who don't, that does not know, I will show you. And I'm going through the psychology of the market psychology. What is happening in this market? And how do you trade the head and shoulder pattern? There's only one way to trade a head and shoulder pattern. Alright. Alright, so that red line is my support line. The market came up. It made a left shoulder. You will see this lower high here. It made a high, so we're still in the bullish market. There's my bullish trend line. And look what happened here. The market broke my trend line, but it held the support. So this horizontal support is still holding up. And then we made a right shoulder. Head and shoulder pattern, guys, you only sell when the support breaks. You cannot do anything else with the head and shoulder pattern. If I extend this line, can you see how my past support became my future resistance? The market held the support here, broke the support, came back, past support became future resistance. I know that is my resistance. I know I'm in a downtrend because the market is making lower highs and lower lows. I know in a bear market I want to sell. And where do I want to sell? I don't want to sell when the support breaks. I can sell when the resistance held up. Or again, I can trade in a channel. I'm in a bear market. I draw an uptrend line. As soon as that trend line breaks, I'm selling. Very easy. Is there anything about this that you don't understand? And how do I know what is the rules of the head and shoulder pattern? What is my target? The target of a head and shoulder pattern, if you sell the support, the distance between your neckline and your head, that distance will be the target down here. So this price here will be your target, 14213. If I sell this market at 1.5 on my head and shoulder pattern that broke the support, I am aiming for 1, 2 and 3, and I want to see there the market took me out. There's a nice 800 pip limit, 800 pip trade, just because I understand resistance and support, and I understand and kept to the rules of head and shoulder pattern. Any questions on that? Here's the inverse head and shoulder pattern here at the bottom. Do you see it? Before I market, you look at this market and see if you guys can get the head and shoulder pattern before I market here. Where's the support? Where's the resistance? Where will you buy or sell? And where will your target be? Alright, there's my resistance there. There's my left shoulder. There's my head. There's my right shoulder. Alright, so when do I enter? I enter when the resistance break, and I aim for the same distance from the head to the neckline. So that distance is the same distance as there, and there you see I bought at 1315 and I took my profit at 4644. That's a very nice profit. Cyril is asking a question: is the head and shoulder pattern a sign of a bearish trade? Cyril, it is a sign of a trend reversal pattern, and otherwise, if the market comes down in this instance, if the market is in a bear market or the sellers are in control, the head and shoulder pattern shows me that the trend is turning. So then I know that the market is going up from there. Head and shoulder pattern is a trend reversal pattern. So when the market comes down in a bear market, it will show you an inverse head and shoulder pattern like this one here, and the market became bullish. And with this example here is a nice example. We were bullish, and there's the head and shoulder pattern, which is a trend reversal again. From there the market is most likely to come down in a bearish market. Is that clear, Cyril? Trend reversal pattern. If the market is bearish, it will show you inverse, and the market will turn around bullish. And when the market is bullish, it will show you head and shoulder pattern, and the market will fall from there. So that's a very common pattern in the market. I love the head and shoulders. If you trade it correctly, then there's no way that you should be scared to enter that trade. I'm going to indicate this a little bit later. I just want to look for some other patterns before we go on to. I just want to go into this market again, head and shoulder pattern. If I get something, then we can work with that. Otherwise, we're just moving on. Do you see this little small head and shoulder here again? This is on the pound Aussie. Let's go to it quickly. We already did it. There's the whole head and shoulder pattern. Alright, there's the left shoulder, there's the head, right shoulder. I enter this market when the market breaks. When the support breaks, I'm selling. My stop obviously will be far off, but that's the rules. And let's see if this trade worked out. There is the distance between the head and my neckline, and that will be the same distance to my target area. So I entered the market here short, or I sold, and 1650 was my limit. And you will see that this is a failure. Alright, so that's what I said. 90% of the time the head and shoulder pattern will pay off. In this instance is a good example where the head and shoulder did not pay off. We had some profit here. The guys most likely will put their stops on entry because that was a nice profit already. But this head and shoulder pattern here at the top didn't go to our limit area. Guys, that is something that you must understand of trading. There will be losses, there will be failed patterns. Even if your analysis is correct, you did everything right, your balance sheet will show some losses. We must just manage that our profits is more than our losses, that we have in the end of the month, we have money to take home, that our book doesn't grow negatively. So what do you want to do in this market? I'm just doing it randomly, guys. That is your trend line. Remember, we're in a bullish market. We're plotting out support here, and we can already see that this market is trying to break. Just want to delete this. This is something else. This market is trying to break that trend line. So this market is attempting to turn around. It did not turn around yet. The bears are still not in control. The bulls are still in control. The buyers are in control. The market is going up. But that's the first thing of a trend line or market that wants to turn around, is that the trend line breaks. That's why a trend line is at the bottom at the bullish market, and on the bearish market the trend line is at the top, because we want to know when the market breaks. Look at this example. The market broke the trend line, and very importantly, the second thing that must happen, the market must take out resistance. There's the resistance. It came down a little bit and it broke through. Alright? So that's the second thing must happen. So the first thing with this trend line is the trend line break. But the second thing that must happen, that didn't happen yet here, is my support must be taken out. If this support holds up, guys, this market is still bullish. The buyers are still in control. I can't sell that market because the trend line broke. I can sell this market when the market is making lower lows. And that means that my support must be broken every time. So there's a support, and there's a support. There's three supports that I want to know that bears are in control, or the sellers are in control. I don't want to sell this market as yet. Everybody happy with that? Guys, do you know the double bottom and the double top? It's very easy to understand. I want to see if I get some trade here. And how do you trade it? It looks very there's a triangle again. I'm going through the market quickly. Let's look at this market quickly. Canadian dollar again. This is the daily chart. We are bullish. Our trend lines are at the bottom. There's one trend line, and there's a steeper trend line here. I see this is very steep trend line, maybe something like that, and you can already see here the market broke the trend line here. It's trying to take out the support here. This little low here, I mark that as a support, and even that is a support. You will see this now for the third time that mud market is testing support. So what is happening here? The sellers want to take control. The sellers want to break that support. And what I want to do, I don't want to do anything here because we're in a sideways movement. Alright. I think we must go on to indicators. I want to show you a few indicators that I use, which can help you to make decisions, and how we can add them to bullish and bearish markets, and how we can add them to support and resistance. Any questions? I'm just looking for a nice market that we can work with indicators. Alright, thank you very much. Everybody is still fine? Okay. This is the British pound. I'm going down to the daily. We know we're in a bearish market here. How do we know that? We're making higher highs and higher lows. Can you see how the market is testing this trend line here? Can you see here at the bottom it already took out the support? So resistance, sorry. There's a resistance. Came here, test the resistance. Came here, test the resistance. And now again we are around the resistance area here. First indicator that we will use, or that we will discuss tonight. Let's do the moving average. I will do that later. I want to do oscillator. I want to do the stochastic and the let me see what I'm going to use. Let's do the MACD. Alright, I'm using the Instagram. Some MACDs has got only two lines. This is exactly the same as where the fast line, guys, is crossing the slower line. Alright, Bongani, you've got a question. When a resistance level is broken, where can one set take profit? Alright, so you want to know that if the market is breaking a resistance, we know we want to buy, and we want to then set the limit area or take profit area. Usually it goes to the following resistance, Bongani. In other words, if this market breaks this resistance and the market is keep going up, I can plan that the market will hit this resistance, because that is the last area that the bears were in control, and that is the following area that wants the bulls want to take over. Alright, is that understood? Do you understand that? So usually when a resistance breaks, it goes to the following resistance. That will be that one, and that will be the following resistance, and that will be the following resistance. Alright, so if you're in a bull market, the resistance broke, you know that the bulls are going for the following resistance. If you're in a down market and the supports get taken out, you know that the bears wants to gun and take out the following support. Then that will be your take profit area. Very simple. Alright, so let's look at this indicator. We're in a bear market. Let's go down to the daily again. I told you that we can draw a channel. Let's delete all that red lines again. And we want to sell when the market breaks my channel corrective moves. I know in a bear market I want to sell. As soon as this small trend line breaks, then I want to sell. Sorry, don't want to use this one, the MACD now. Sorry guys. I want to use the stochastic, and I'm going to show you how the indicator will help me. There you are. And if you want to double check your trade, you can sell when the indicator is at the high and crosses down. Alright, so let's look at this bear market. I'm not going to look at any buy at this market. So I'm not going to look at my indicator at the bottom, because the bottoms will show me buy areas. I'm not buying in this market, I'm going down. I'm looking where my indicator shows me a cross, and as soon as my trend line then breaks, then it's a sign to enter the sell. There I can see on this indicator is coming down. At this area here where the market is at the resistance of this channel, again this indicator is doing a cross, it's going down. Even at this stage here, look what happened in this market. The market had a horizontal support that it tested all the time. It broke down here, tested the resistance again, and broke again. Alright? So if you want to use your indicator with your price action, always good to do that. Your indicator is just a confirmation. Am I looking at this indicator here at the bottom? At this stage, this indicator doesn't help me a lot, because I'm not looking to buy in this market. We are in a bearish market. What I do want to see here is I see the market is on the lows here. This is support, 14813. That's a nice support area for the pound and the dollar. I'm waiting for this to break out to the top, break out resistance, test that top resistance, and if I can do it much lower here on the support, rather buy on the support with my indicator which is totally oversold here, then I will look for a buy. Alright, so stochastic shows you overbought and oversold signals. You can see here when we were in the up run, we were in a bullish market. The market broke the trend line. Trend line is at the bottom, broke my support, and my indicator was at extreme overbought area. Overbought on my indicator. My support has been taken out. My support is there. Support is taken out. My trend line already broke. Indicator at the overbought. That is a nice trade to sell, and you are selling in a bear market. Mugani also what you can do, if you're in a market and you want to ride the market, this is another trick, guys. We know that the bears wants to take out the following support and the bulls want to take out the following resistance. So you can go for that resistance, or this area we are selling. Guys, you stay in that trade as long as the highs is lower than the previous high. So as long as your resistance keeps coming down, you are staying in that market, because you sold high and you're riding the market. As soon as the market is making a new low, then you will just move your stop down to the previous high. If the market takes out the low, your stop will be above the previous resistance, and you can ride this market until it just stops you out. So that's a nice thing to have. And if you don't know where the last resistance or the last support is, I think you must know at this stage. There's one indicator that you can use, and it's called the parabolic SAR, stop and reverse. It will give you dots. So if you're in a bear market, the dots will be at the top. As soon as there is a new dot, it will give you exact price. You can put your stop on that dots. Obviously we are selling. The parabolic stop and reverse will show you where your stops must be. Very nice thing to use. Another indicator, placing of stops. That's 2 indicators we already did. Any questions on that? Alright, perfect. Can you tell me more about these 2 moving lines in a stochastic indicator? Or those are moving averages, the ones who are usually in the chat. Alright, moving average is this line here. I'm going to mark this as a thick one. Alright, let's do this. Postman, I will get to your question now. And let's delete this. Perfect. A moving average is an indicator that is on your chart. It's not at the bottom here. It is on your chart between the candles. Now this is a 200-day moving average, and that simply means that that moving average is plotting every 200 candles of the daily chart. So I use only one indicator or one moving average. I use only the 200-day moving average on my daily. So on that chart, it summarizes or adding up the average of the last 200 candles, and that is my moving average. You will see if I insert another indicator, and I will indicate another moving average, and I will make it another style. I'm going to show you now. Let's make this a 100 moving average, and we make it blue. You will see that now 100 candles summarized in that line. So 100 is smaller than the 200, so it will be faster. So that is a moving average, 200-day and 100-day moving average. That is on your chart. So that's a moving average that we use and talk about in the room. Some traders also use the crosses of the moving average to sell and buy, and also you can see it acts as support and resistance. Look at this blue line. The market came down to the 100-day moving average all the time and bounced off. So that can use in a bull market as a support, and you can use moving average in a bear market as resistance. Same as we did now with trend lines. That is not the same lines as the stochastic. The stochastic is overbought and oversold signal, and that is totally calculated on a different manner. So I think I answered your question perfect. Just give me an indication. Mr. Postman, how do you confirm a new trend? A trend is confirmed when it's making higher highs and higher lows where it previously made lower highs and lower lows. In other words, when the supports got taken out. Alright, in this instance, let's delete this. Let me explain that to you. Alright, this is a trend or downward movement, downward market, bear market. And a new trend, Mr. Postman, will be when the market is making higher highs in higher lows. In other words, the resistance is being taken out. So this will be the sign that the market has turned or a new trend has begun. And my first and second, like I said earlier, my first sign is that the resistance line of my trend will be broken. My trend line will be broken. And my second thing that must happen is that my resistance must be taken out. If that happens, I can assume there's a new trend coming. I want to buy in the market where I previously wanted to sell. Bongani, I'm not a favorite of moving averages. Moving average is a lagging indicator. In other words, you can see at this market, the market is coming down in a channel, and that 200-day moving average is there at the top. So it doesn't help me much. There's too much space between the moving average and the price. I use price patterns like the head and shoulder patterns, double tops and double bottoms, and I use only also candle information. I will go through candle informations now. That is very important, and I will also use it as my indicator is telling me. Alright, Perfect, you're not sure yet? Okay, I just want to read the question. Not really, sir. In a stochastic indicator, there are green line and the red dotted line. What are those two lines indicated and a stochastic? Alright, let's put it on. Let me explain it to you. And we're going stochastic now. Where are you? Alright. Let's delete this one. Alright, you will see here there is two lines here. There's a 14 and a 5. Let me show you the... We can see that. Alright. There's a 14 period and a 5 period. That is the same, you can say, as a 5 moving average. Yes, maybe you want to say that perfect. A 14 moving average and a 5 moving average that they just plot down here. And that is percentage wise calculated. You can read up about it more. It's just an indicator that they use a fast and a slow line, or a fast and a slow period percentage wise, that they plot down here, and as soon as the market makes crosses, which is overbought and oversold, then you can use that indicator together with your price action and your info on top. You can use that. So in a way you are correct that that is a moving averages at the stochastic, but you will see if I put the moving averages of 5 and 14 here, it will not look the same, because it's a percentage D and a percentage K moving average. So let's test that quickly. So let's put in a moving averages of 5. And let's put in a moving averages of 14, because that is the percentage of stochastics. And we make this one a 14. Can you see that the slope is much more forgiving in this area above than the stochastic is there down here? Because this is work percentage wise. There's calculators, some clever guys in trading worked out the overbought and oversold indicator. They put it together, and this indicator shows us the overbought and oversold. It's not important to know what it is, as long as you know how to use it and where to use it. It's much more important, perfect, to know how to use the indicator. Alright, are you happy? Can we move on to the following questions? Guys, when you are trading, try and using your indicator as confirmations. Look at patterns, look at your support and resistance lines, and then candle information. That is very important. There's one big candle information that you can use. You call it a pin bar, or you call it a doji, and that is what I'm looking for now. To show you how you can use. I'm not even going to do Fibonacci. Fibonacci I will do in some other lesson. This is just basic information, basic trading rules, guys. Fibonacci is a bit more advanced. I'm not doing it for this lesson. And I'm looking for a specific trade. Alright, here's one. Guys, this is a pin bar. It is a candle which open and close are very close to each other, and the wicks, do you know how the candles are formed? The wicks are more than 80% of your complete candle. That is a sign that the market is turning. That is only one candle, but that candle can show you that the market is most likely in a sideways movement or most likely gonna turn around. So what happened here? The market came down, broke the trend line. Look how the market broke the trend line, came down again to test it. We buy at the backside. Market went up, and where's my following resistance? That is a resistance area there. But the market didn't come to resistance. It even turned around before that, and it made this nice pin bar. That is a sign in the market that the market is most likely to turn there. And if we do Fibonacci at the following stage, Fibonacci is hidden support and resistance levels. If I draw on my Fibonacci, we can see the market turned around on the 618 there. That will do in advanced course, maybe next in 2 weeks time. That's a pin bar. Let's look at some other candle information. Evening star and morning star is a 3 candle or a 5 candle formation. I'm looking for one quickly. I'm going to scan through my charts, show some candle information. If there any question about candle informations, write this down, guys. Again, very importantly, you will only use an evening star or a pin bar at the top in a bear market, and you'll only use a morning star or evening morning star and a pin bar at the bottom in a bull market. Why is that? We want to buy in the direction of the trend, and we want to sell in the direction of the trend. Alright, here is one. I'm just gonna see if this is a nice example, but let's see. Alright, this is a 4 candle evening star. Is not so good. Okay, let's leave that on. That's not a nice candle formation. Do I have to go through this, guys? Do you want to know what candle formations is? Right, going through it again. Alright, participant number 4. Okay, let me draw it in. That will be much easier. It will be actually more difficult. I'm going to go through quickly and see if I get candle formations. Morning star, evening star, pin bar. Right, candle formations is where price tells us that the market is going to turn. We don't use resistance and support. We don't use anything. We're just watching price action or the candle formation, and we know that the market is going to turn. Just as we know patterns like head and shoulder patterns, double tops, double bottoms, the price action or the candle formation shows me that the market is more likely to turn around. Alright, I'm going to use this as an example. I don't like the example much, but this is quite a good example. We're in a bull market, and the market is showing us there's a pin bar, but it's got a white candle and a black candle, so that is an evening star. Alright, evening stars where the bulls take control. There's a pin bar in the middle, and otherwise they are fighting who is winning here, and the bears take control. That is a sign that the market might turn there. Alright, so let's go back to it. Let's see if I can get some more. There it is, a white candle, candle in the middle, and a black candle. That is a sign of an evening star. The market is most likely to turn around there. And obviously when it's at the bottom, we call it a morning star. It's where we've got a black candle, small white candle at the bottom, and then a white bullish candle again, and the market is most likely to go from there bullish. You can see this as a maybe a 4 or 5 candle morning star. We've got black candles, we've got the pin bar in the middle, and we've got the strong white candle. That is a kind of a morning star. We know that the market is going up from there. Even if it's closer to a resistance, or if it's close to a trend line, then it's much more accurate to use that. I also use my resistance. I use my evening stars there. You can see there's a lot of pin bars and a lot of spikes against the resistance. That's a nice area which you know that the market is most likely to come down. That's another question. How we do know that the resistance and the support will hold up? We do not know. But remember, if our resistance at the top and the market makes spikes like this, and there's an evening star coming up, we know that that market is going down. That resistance is most likely to hold. Most likely selling there with my stops above that high. If the market comes down, if the market is at the bottoms on the support and it comes down, it shows me a pin bar that my indicator is in the oversold area, I know that market is most likely to go up. I can buy that market with my stops below that support, because when that support is taking out, my stops will be below that support. My trade is wrong, I will be taken out, because if that support goes, the market's most likely to go down further. Guys, please always use stops. I just want to use a little bit of money management. Me personally, I don't use more than 4 to 5% of my account on any given trade. And remember, I'm in this game for the last 12 to 13 years, maybe more. I suggest that you guys use the 2 to 3%. In other words, if your trade goes against you, you can only use 3% of your equity, and your stops will be then 3% of your total equity. Alright? Always use stops. Don't go more than 3%, otherwise you can be in trouble. This is an example of a market that came down and fell from 1.38 to 1.05. If you don't have stops, if you bought the market yield in any case and the market comes down, you get margin call. All your money is gone. So your stops will be there to protect you more than 3%. Obviously we're going to a 1 to 2 ratio. You're going to 5 to 6% on that specific trade. Must I tell you something about stop placements? Nice indicator to use. Average true range, and you always use it on the daily. Let's delete this other stuff. Let's delete the RSI. Put that one in again. Average true range is for guys that trades on the daily. You always take your average true range reading there. You can see it's 128 at the moment. There it is at the left. Average true range, that is your daily. 128. You times that by 2, you get 256. Take your average true rating times by 2, and you will know how far from the market you must put your stops. That means if you're trading on the daily, this is for longer term traders, they are selling this market, they're going to put their stops 256 pips above that high, or above the market price. And if they are buying in this market, they're going to put their stops 250 pips below the market price. That is the average true range. The average true range tells you that on average, this market at the moment is 128 pips per day that this market moves. Here at the bottom it was much lower. There was an average true range of 58 pips. So times 2 is 116. When you're in this market, you're buying or selling, your stop should be 2 times 58, 116 pips. So that's the average true range indicator. That is for longer term traders. If you see in a market, here's a market, there's a few pin bars here. This guy wants to sell. He's got one of two choices. You put your stops above that high because that is the last resistance. If that resistance is taken out, then you are out of this market. Other way is that you use 2 times 128, 256, and you can trade this market. Alright, so what did we do tonight? Support and resistance. We did channels. We did some few indicators. We did the moving average. That is normal basic trading rules, guys. You buy in the direction of the trend. You sell in the direction of the trend. A trend reverses when the support and resistance are taken out. When my trend line is broken, then I will trade. I will not trade if this market is sideways. Look at this market here. There's a resistance. Let's mark it like this. This is just a spike. And we've got a few support here. There's a support there. And there's a support there. Is there any trade at the moment on this currency pair? This is a New Zealand dollar CAD. Is there any trade that you see at the moment? Did the support and resistance break? No. Are we in a sideways movement? Yes. So what will happen if I trade here? Nothing. I'm going to be in the market. This market is taking me 50 pips up, 50 pips down. 50 pips up, 100 pips down. Because we're in a sideways movement. When will we trade this market? So let's analyze. Let's delete that indicator. We'll put in something different again. So let's go through the typical mindset of a trader and how he uses common basic principles of trading and how we will analyze this market. So let's put in my indicator. Let's put in the overbought and oversold signal, and that is my stochastic. And let's see that what this market is telling me. Okay, so first of all, we see that this resistance is taken out. Remember, this is a monthly chart. You always start at the back or the biggest time frame and you work back. Alright, we know that we're in a bullish market at the moment because our trend line is at the bottom. So at this market there is still nothing happening. The market came down. Do you see this previous resistance here? That high there? Look how the market came down and tested it as support. Support. My trend line is also a support. Go down to the daily. You can see what happened here. We're in an uptrend. Here's my trend line. The market came down, past resistance, future support, and the market from there just went up. There's still no trade. I see nothing here. There's no candle information. I can see here at the bottom my indicator was here at the low. That was totally oversold at this stage. But there was no indication in this market that I wanted to buy. All my indicators, I was at the support level, I was at the upward trend line, my indicator was at the oversold signal, but there was no candle information that I knew I can buy this trade. Alright, there was no indication here that the market wants to turn here. I'm going down to the daily again. There's my 200-day moving averages that I use, and I see this market is just, look at this, all the spikes. This is just spike. This is a market that doesn't know where it wants to go. You cannot trade anything here. So that's a New Zealand dollar CAD. I see no trade at it, nothing. Let's go to some of the other markets and see if we can get an indication if we can trade something there. Alright, this is a British pound. Let's put in our indicator again. Alright guys, while I'm going through it, if there are any questions you can do it now. And we put in an indicator, our stochastic. We will do one more indicator after that. Okay, so this is the monthly. This is an extremely bearish market here. Alright, so what am I planning? What am I thinking here at this moment? If I draw my trend line there over the resistance, and I see there's a trend line down here over the support, there's some kind of triangle. The market broke in the direction of the triangle, and it just turned again. You will see your market is totally overbought there, your indicator, but there's no reason why you should sell there, even if it's a monthly. This is for longer term traders. We're going down to the weekly. Alright, see, let's what's happening here. There was a nice bullish market. My trend line was in it. There's the trend line at the bottom. I'm working with support. There's the market, broke my support on my trend line, and I knew that this is my next or following support. I want that to be taken out. Alright, my indicator is a nice high, overbought signal here. Going down to the daily, it's still planning. There the market took out the support. Will I sell that? I'm reluctant to sell that market if I use normal support and resistance. Let's look at it. Alright, so came down. The resistance is up there. Point number 1, my trend line is broken. Point number 2, my support is breaking. Alright, so I can sell there. And what is the rules? My target will be the same distance, take out, and I am filled here with the take profit. Let's go more recently. I like this market at the moment. Why is that? I've got my resistance here. Look how the market bounced off the resistance or the trend line. My indicator is up here. So let's analyze this market. Do you see that trend line held up? Indicator was in an overbought area, came down, but there's one thing missing. There's no candle information that I should sell this market. Going down to the hourly, that area held up, but there's nothing indicator wise, price action wise, that shows me that I can sell that market. There's a question, what is the step-by-step guide before taking a trade? Alright, Abigail, I think every trader differs, but that's just how I'm doing it. I'm starting with a monthly. I'm looking at support and resistance line. I'm looking at trend lines. I'm looking at my indicators that's showing me a buy or a sell signal. And the last thing before I enter a trade is the market must give me a candle formation. So that is my 3 steps. Support and resistance, indicator, and candle formation. That is the easiest way to trade. Are you happy with that? Okay, remember Abigail, this is very basic. So this is just candle information, support and resistance indicators. Later we will get to our retracements, which is Fibonacci levels. And if you're doing advanced course, maybe in a few weeks time, we're doing the Elliott wave principle, where we will use candles, we will use triangles to show you that it's a trend continuation pattern. And Abigail, remember the head and shoulder pattern. That is an easy trade to take. If you see a head and shoulder pattern in the market, it's got certain rules. It's got a certain look. You know where to sell, you know where to buy, and you know what the stops and limits, where they must be. So look at price patterns. Double bottoms, double tops, you know how you should trade that, and the head and shoulder pattern. So in the next week or 2 weeks time, go look at the market and see if you can see head and shoulder patterns. Even if it's on the hourly or the 30-minute chart. Then you will see. You will see this is not a good example, but let's see if we can get something. Just going quickly through the market. Alright, let's look at this as an example. This is the Australian dollar 4-hour chart. We are in a bearish market. In other words, we're coming down. There's one trend line that you can draw in there, and you've got one trend line that came down here. Alright, so what happened here? The market came down, it made higher lows, lower lows, and lower highs. There's some sort of resistance here that's still holding up. Resistance, the market is just testing resistance, Abigail. But look what is happening at this moment. We've got some sort of a left shoulder here. Can you see that? You can see that left shoulder there, and you can see some head here, and you can some sort of right shoulder here. Alright, so that's basically a very skew head and shoulder pattern, which we know how to trade. And how we trade it? We trade when the resistance is broken. So this is a trade that we can look at in the following 2 to 3 trading sessions, maybe before Wednesday. I want to see if this resistance break, and it will probably go down there up to the trend line, because I know this is my following resistance. There's my resistance, and I know the rules of my head and shoulder pattern is that it should be the same area from my neck to my head neckline. It's the same distance that I must go for as my target. And you will see the neckline to the head is the same distance to my following resistance line. So this can be a head and shoulder pattern. I think if this resistance break here, let's move it a little bit up. You can see this past support here. Look how that became resistance. Can you guys now see how the market is surely this it's a phenomenon in the market. This was a support line, it's now a resistance line. Look at that price range, it just spikes through, it can't break that. So if this market breaks 7850, it's most likely going to run 170 pips to this trend line here at the top, because that is my following resistance and that is my target of my head and shoulder pattern. So this is what I'm giving you guys for the next week. Let's look at this head and shoulder pattern on the Australian dollar 4 hours. You will see it on the 1 hour as well. There you will see a nice head and shoulder pattern. The rules are that you must wait for the resistance and you can buy that. And your target limit will be, make it 08010. That is my following resistance. I know that the bulls wants to take control here. They're most likely to gun for this resistance. And that resistance is also where the bears wants to fight back. They want to get up that stronghold. They want the price to stay below that resistance. They are selling there. Alright, so is everybody happy with that example in the following week? Guys, please go to SA Trader Lounge. Go register yourself. Go open up a demo account with ACM Gold. There's a lot of prizes that's giving away. There's already one lady today that got a live account of $1,000. That's her, and that's hers now. She can trade it. That's her account. She can make money now. So go please register. There's not 1 or 2 prizes. There's a lot of prizes to be won. Live accounts given away. Please go register. SA Trader Lounge. Sibisuso, there's one question, and what would be your stop loss? Alright, let's take the stop losses. Stop loss below the head 7624, so make your stop loss 7620. If we break 7860, you buy this market with stops below the head. That is your last support, and you go for the following resistance. There's one thing about the head and shoulder pattern that I will show you in the next video. The risk reward is 1-to-1. In other words, if you risk $1, your reward will only be $1. If you risk 50 pips, then your reward will be 50 pips. It's not an example in the market or pattern in the market which is very risk reward sense or good risk reward rise, but it's a pattern that will work 90% of the time if you stick to the rules. The rules are only buy if it breaks resistance with stop below the head, and you go for the same distance as the head to the neckline. Same as the inverse head and shoulder, same with the normal head and shoulder. Alright, so that's our trade for the coming week or so. Let's talk to each other on SA Trader Lounge. I will show this update of this trade in the following week. Let's see how this trade works. This is basic trading. We did support and resistance. We did head and shoulder patterns. We did trend lines, guys, and we did some indicators, and we also did candle information. If you go to some other courses or other companies, I know today's lesson will cost you at least 6,000 Rand. Global Forex Institute is giving free webinars. You can also go to SA Trader Lounge and you can book your live session. Your first class will be for free. So go to the live session. There's sessions in Sandton, and there's in Durban area. There's also some live trading in the rooms with a lot of guys that works with the live market, also for free. And then if you go further, you can just contact George van der Riet. If there's any more questions, I'm gladly to answer it now. If there's anything more that you want me to cover in this basic rules, basic trading patterns, basic trading habits, please get yourself in this habit to stick to the rules. And support and resistance, very important. Past support become future resistance. And I'm very fond of trading. This is my big love in the world. Just one more thing, if I can show you. Look at this. I'm going to put a thumbs up, or let's put an arrow up. Example, support. Look how it became resistance. Look at that resistance. A horizontal line, past support, future resistance. Look at this horizontal line. There's my support. Look how the market is making it a resistance. It's a phenomenal. Past support becomes future resistance, and future resistance becomes future support. Everybody happy? No more questions? I will log off in 1.5 minutes. I will give somebody else a turn. Ask some questions. Anything that I didn't cover? Happy, Cyril? Guys, remember, every 2 weeks is the basic trading. I will go further and further. We go more intense as the weeks progresses. My pleasure, Abigail. And when you guys feel happy and you are comfortable with support and resistance and the basic trading, you then can alternate to the other 2 weeks, and there we do much more intense advanced trading strategies. Any more questions? We're logging off in 30 minutes. I hope you guys enjoyed it. Thank you very much for joining. I enjoy this time with you. I enjoy your questions. There was a lot of nice questions tonight. I enjoyed very much. And keep in touch on SA Trader Lounge. Yes, go open up those demos. Open up those demos. Go buy and sell. I will post on SA Trader Lounge a few trades that I'm looking for, and let's see who's winning those prizes. Who's in front? I know George is in front with over 300% growth. Immaculate. If your mentor cannot give his trading results, you know he's a con. If your mentor or the guy that trains you on the first page of a SA trader Forex competition, you know you're on the right track. You're in the right hands. Guys, we are all trading live. That's why we're doing this. We're doing it for free. We're helping you to be better traders and to make some money. This is an excellent market to be in. As long as you keep your discipline and your money management, as long as you keep to the rules of support and resistance patterns. Alright everybody, thank you very much. I see you in the week on SA Trader Lounge. Have a nice evening.